We just saw a major influx of gold being shipped directly into the United States, indicating that there's more going on beneath the surface than you might think. The inflows of gold are in a strong uptrend since October of 2024, and now are up more than 3 times larger than the amount of gold that was shipped in right at the onset of the Russian-Ukrainian war back in February and March of 2022. This seems to be the work of institutions and potentially even governments and central banks. But who's behind this major surge of gold and the inflows? And what do they know that we don't? Even more interesting is the fact that many nations choose to store their gold in the United States. Countries like the Netherlands, Italy, Germany, and a few other nations, as well as the IMF. Or is something more sinister going on? Just a month or so ago, we were supposedly going to audit Fort Knox, brought up by Elon Musk and the Doge Department, as well as Donald Trump, which holds about half of the gold in the United States gold reserve, to the tune of $405.6 billion in today's prices, as gold is trending strong to the upside and up to about $3,000 per troy ounce. Now, why this is so important is because everyone knows that gold is real money against the endless amounts of inflationary governments, reckless spending, fake dollars under QE initiatives, otherwise known as quantitative easing. We've been doing this since the great housing collapse of 2008, but the last time we did a proper audit of the gold reserves at Fort Knox was in the 1950s, and nobody truly knows how much gold is down there aside from people that say they've done a few walkthroughs. Even in an article from Coos Jansen, a gold bug from 2015 states that the US government lost 7 Fort Knox gold audit reports. However, this kind of just got swept under the rug as February 19, 2025, Treasury Secretary Scott Bessent, during an interview with Dan O'Donnell, the question was brought up, to which he responded that an audit was conducted annually and that all the gold is present and accounted for. In other words, we may never truly know. But the real question is, why is all of this happening now? Do they think the bottom is going to fall out of the markets? Are they hiding something, or are they preparing for a situation where the US dollar once again goes gold backed? And more importantly, what does this mean for crypto markets? Will any cryptos be tied to this new gold standard? Some people in the XRP community believe that this new gold standard will be tied to XRP and the XRPL as the government reprices XRP to represent its backing to gold, like back in 1934 under FDR when they repriced gold to $35 per troy ounce. Then, essentially through the 70s, the dollar became less valuable through inflation, money printing, and the government repriced gold yet again to $42.22 under Richard Nixon and the Bretton Woods Agreement. And it seems that's exactly what's happening now, as there's a flight to gold under uncertain economic conditions, and the US dollar is worth less and less year over year. Gold continues to rally and break new highs. Now, whatever the case may be, macro analyst and gold investor Jim Rickards has some takes on the situation surrounding gold and the reserves at Fort Knox and the current price action, as does Larry Fink and how he thinks about crypto and gold, and we'll be sure to cover it all in this video. So let's dive in, and as always, if you're feeling blessed and bullish, comment 777, and if you're going to be the richest person in your family tree, smash the subscribe button. Hello and welcome back to the channel. If you're new here, my name is Paul, and you can find me on Twitter or X at PauliDeFi, PauliDeFi. Recently, we saw a post from the Unusual Whales that kind of sparked my interest. Now, everybody knows that gold has been trending hard to the upside. When we actually broke above recent range highs of about $2,000 back sometime in December of 2023, over the last year into March and May, now, coming into April of this year, I should say, gold has been on one of the strongest rallies it's ever seen in recent years in history. And I'm talking the last time we saw a rally like this was in a major situation like the Great Recession back in 2008 to the local top in 2011. What's super interesting though is that the markets have continued to rally, and yes, we're starting to see a bit of sell pressure, we're starting to see the VIX go up, but now we're seeing another one of these major rallies to the upside yet again, right? We broke above this cup and a potential handle over here and are now in new all-time high territory. So what's really going on? Well, then when you see a post like this, inbound shipments of precious metals dwarf longer run average, which is quite impressive. We're talking $30 billion plus now being imported just this month alone. And I expect this trend to continue even if we don't get as many major highs, still to the upside with some lower highs, but far more money imported in gold than we've seen even since the Russia-Ukraine war. This has left many people speculating about what's actually going on. And matter of fact, is the government buying gold and not being 100% truthful because they found some interesting things in the audit? Is that why the prices are going up? Is it other nation states and actors like China and Russia trying to get off the US dollar, the petrodollar, and into a safety or a hedge, I should say, against the US dollar and inflation, and just away from the government bond market, generally speaking, into gold? Well, now we're seeing other countries as well store their gold in the United States, and the real question becomes, are they being truthful? Are other countries shipping gold into the United States? Because this isn't just a US asset, this is an international asset. One would argue that this is the only real asset of money in the world, and the fact that everything else is credit. So in a short clip from Jim Rickards, who is an economist and essentially a gold bug, he shares some interesting facts about what's happening right now and why the price of gold is potentially going up. Let's listen.
Gold is not going up. The dollar is going down.
Right.
Now, as gold is constant by weight, as I said, it's an element. It just sits there. But in the time I've been an investor, it took $700 to buy an ounce of gold. I have friends who bought it $200. Good for them. I'm very happy for them. But I started buying around $700. It used to take $700 to buy an ounce of gold. Today it takes about $2,900 to buy an ounce of gold. The ounce of gold hasn't changed. What changed is that the dollar has collapsed. Now, people keep saying we have a strong dollar, and yes, I hear that all the time. And I look at them and I say, compared to what? Meaning, yeah, compared to the euro and the yuan and the yen and Swiss francs and sterling, yes. But compared to gold, no. The dollar has collapsed compared to gold. So that to me is a better metric. But I'll tell you a secret. Here's what's.
And Jim Rickards is absolutely right. We're looking at gold against the US dollar. So whenever this chart is trending to the upside, it's because gold is becoming more valuable relative to the dollar, which means there's a flight to buy gold by major institutions, major investors, governments, and arguably even central banks. And this has led many to speculate about XRP and crypto being involved in a new financial structure where not only the US dollar is gold backed, but much of it is tied to XRP and how that would make it one of the most valuable assets known to man. However, I completely disregard these types of statements, and not because I'm trying to be a bear or anything. It's just that even the developers and the CTO over at Ripple have already debunked these rumors. XRP is a crypto. Its asset is held and maintained on the XRPL or the XRP ledger. It is completely transparent, and the price is based on supply and demand fluctuations in the market. However, many people think that similar to Bretton Woods, XRP would be basically pulled off the market and repriced to a higher amount. However, it's important to remember that XRP is the largest asset held and created by a company named Ripple. Ripple is a company that has venture capital. They operate very similar to any other major company that comes out of Silicon Valley. San Francisco has offices all over the world. They're very successful in their own right. They offer solutions to all sorts of clients, which is why they have customers and reviews. And at the end of the day, gold is very different. It is a hard element and an asset that is quote unquote scarce. You could argue that XRP also is. However, we also have a lot of transparency because of the blockchain, and there's 100 billion of them, and we don't know how much gold there is. No one country has hegemony over gold, whereas right now Ripple owns the majority of XRP, or at least is the largest holder, and that is an asset that they are going to use to act in their best interest, according to Joel Katz, otherwise known as David Schwartz, the CTO over at Ripple. So that's why even in 2023, he made a post about all of the different rumors and misinformation out there and how essentially XRP can't be pegged to gold, silver, or anything else. He said, in theory, nothing prevents someone from trying to peg the price, but it's absurd to expect someone to do this when it's virtually impossible to imagine why anyone would want to do that. Because then XRP itself is no longer an asset in and of itself on its own. Instead, it's basically gold. But that's not what XRP is. XRP is the prime token, only token, that runs on the XRP ledger, which is very effective, efficient, and will be used by all sorts of institutions and potentially plenty of banks worldwide. That said, back in 2014, so it's important to pay attention to when this stuff comes out because a lot can change since then. GBI had an integration that allowed Ripple users to trade, send, and spend gold. So this would be an example of what he's talking about, but it's very different. It's not necessarily backed by gold. They're just using the blockchain and XRP as a form of a payment transaction in order to purchase gold. In other words, this means that anyone holding Bitcoin can purchase gold on the Ripple network in the form of XAU balances issued by GBI. These balances are backed by physical gold deposited in secure vaults around the world in cities like New York, London, and Zurich. Not only can users easily send gold to friends and family, anyone can redeem, and this is a key word, redeem XAU balances for physical gold delivery at any time. So an old developer that goes by the name Hammertoe back in 2023 called Matt Hamilton, that's a funny username, who no longer works for them but has built some really unique stuff in the blockchain space, basically stated that while people were like, you can totally peg it to gold, he's basically stating you can track gold by tokenizing it, and that's exactly what we're trying to do, which is why Ripple is focused on RLUSD, asset tokenization, and partnerships for the XRP ledger. He's basically stating the exact same thing we've been talking about over and over and over, so let's not buy into the misinformation. You can track gold by tokenizing it on the XRP ledger and creating a token such as XAU, like companies have been doing for the past decade. So basically you're tokenizing gold, which you would then be able to redeem for actual gold, because that is what gold backed means. That's what the dollar used to be, right? We were gold backed. However, gold, again, is an international asset that nobody and everybody can own, whereas XRP is really the major asset behind a company who has a very efficient blockchain that will be used by plenty of players. But there's so much crap out there. The goal of XRP, or better yet, the company Ripple, is not to have it gold backed. The goal is to create a blockchain and an ecosystem that is extremely robust, that is used billions and trillions of times, that becomes a gateway of efficiency for real world assets, asset tokenization, CBDCs in other countries, so on and so forth. That is very different than anything being gold backed, which is why the last thing he shares in this post, which I highly recommend you check out, he says XRP and the XRPL really are, and this is directly from the CTO of Ripple, not me, David Schwartz. He said, they really are, what you see is what you get. If you're imagining that there's some massive secret You're imagining. You can imagine anything about anything. Imagining things doesn't justify believing them. Be excited about what is actually there, or build things. In other words, the things that you actually see are being built is usually what is actually reality and there. If you can't verify it with a proper source of information, posts like this will lead you to have hopium and hold on to an asset for longer than you probably should. Now, that said, back to this post, anyone can redeem their gold balances for physical gold delivery at any time, leads me to this post right here. Why are we seeing so many imports of gold bars? Well, I would argue whoever's buying gold obviously saw that we were in a 1, 2, 3, and 4 separate times of a range and touch from 2020, which is a period of almost 4 to 5 straight years. A breakout right here on volume led us to new higher highs, which was expected considering this was a massive, we're talking cup and handle, since 2011. And in an age of uncertainty, on a strong breakout, who wouldn't want to buy gold? And arguably, who wouldn't want to actually hold their physical gold, which is why I believe we are seeing imports. People are buying gold through paper on exchanges, and because the demand is so great, there have to be imports from the people that are actually selling the certificates or the notes. Gold is real. Still, I find it really interesting what Larry Fink over at BlackRock had to say about this. Let's listen.
And also, I do believe the role of crypto, it's digitizing gold in many ways. Instead of investing in gold as a hedge against inflation or the devaluation of your currency, whatever country you're in, Bitcoin is an international asset. It's not based on any one currency. And so it can represent an asset that people can play as an alternative. And also,
And so when he refers to Bitcoin, it's because it shares a lot of the common properties of gold, whereas Ripple is a bit more unique in the fact that it is more efficient. It is extremely low cost for transactions. It's definitely more energy efficient than Bitcoin, but at the end of the day, they serve two different purposes. So if anything, Bitcoin looks to be more like gold than XRP. Yet, XRP has recently been outperforming Bitcoin. Generally speaking, Bitcoin has a very strong and long track record of being considered an asset that looks like gold. But it's important to remember we're still very early in the market, and that at the end of the day, a lot of major institutional players still don't hold Bitcoin to the same degree that they hold gold, and they ultimately haven't looked at the majority of cryptocurrencies like a hedge just yet. Instead, they treat it like a risk on asset, which is why in the current volatility and uncertainties of the market, and going back to November 22nd of 2024, you can see that Bitcoin price popped off for two local highs, somewhere around the 106 to 109 range, have been dumping since the inauguration of Trump, while gold has actually been climbing. And so arguably we have a negative correlation, which means gold is going up, Bitcoin is going down. Eventually, I do expect both of these to look more and more similar in the way that they trade as Bitcoin becomes more mature and as you have more institutions holding or sitting on it in their balance sheets. But as things stand, it's still a relatively nascent industry. And adoption and global belief is not there just yet, which means we do have an opportunity. It means that we're early. It means that everyday retail investors like me and you can get ahead of major investors and participants. Still, this leaves me with a few questions about what's going on with Fort Knox and the gold reserves. And again, Jim Rickards shares some really unique information.
Pretty sure they won't ask that question. Because if you do, you are tampering with the primal forces. You are getting at something. And you know who Blythe Masters is. Blythe was the head of global commodities trading for JP Morgan for many years. She's now, she's moved on to other things. She's been away from that for a while. But she said something some years ago, and I saw it and I verified it. Then I went back to find it and it was gone, like it was erased from the internet. But she said it. She said, gold never settles. And what she meant by that was all the paper gold transactions in the world will never turn into physical gold. They cannot. It's impossible. There isn't enough gold. And if we even tried, gold would go to $1,000 an ounce so fast, you couldn't.
Now, I'm going to pause it there. Now, notice what he did. He actually said something and then it cut and paused and then skipped forward, almost like the podcast or YouTube itself is trying to hide some information about where gold is going to go. Very interesting and weird. And so let's replay that for just a second.
What she meant by that was all the paper gold transactions in the world will never turn into physical gold. They cannot. It's impossible. There isn't enough gold. And if we even tried, gold would go to $1,000 an ounce so fast you couldn't.
Did you catch that? Again, I was like, maybe my computer skipped. Maybe there was a lag in the video or the way that it was buffering. But no, it genuinely skips right there. And I don't know what's going on. I don't know why that's the case. But I believe at this point in time, gold is likely going a lot higher, which leads me to believe people are really worried about what happens next in the economy. If there's a flight to gold, it's typically because of macro uncertainties, which should mean that you and I should be in cash and then look for risk on assets that are going to be correlated to the downside, or better yet, an easier way to put this. If something looks like it's currently dumping and it's down more than 15-20% from its highs, chances are it's going to continue dumping. If something is currently going up, it's likely because of the uncertainty and that it's a flight to safety or a hedge against uncertainty. Now, that said, I'm not saying everyone should go and sell all of their XRP. However, I will say that we have a pretty strong resistance, and I'll go ahead and make this red for the sake of this example, right here at the 290 to 277 range. So if we fail to break above here on XRP and put in a new lower high, then we're likely going to continue our local intermediate term trend to the downside, especially if we break below our range of $2 to 195. This would lead me to believe that this trend is truly over for the short term, even if not for the long term, which would take us down to the 150 range at minimum. So that said, just play it cautiously. The fact that we had some of the largest news to occur in recent memory for XRP with the appeal being dropped, and the fact that we actually struggled to maintain a healthy range above this trend line right here, and definitely not above the major intermediate term trend from the all-time high to the Trump pump of about $3. So everything is looking relatively bearish, even though this trend right here looks slightly bullish. I'd still like to see a break above this trend line right here, and arguably a break above that $2.60 range at minimum to take us back up to 278 to 280. If we can get to this range here, then I would say, okay, now I'm looking to potentially add to some risk. But as things stand, if we touch the $2 range one last time, it's extremely likely, and I would bet a lot of more money to the downside. I'd actually take on a little bit of leverage. Now, that is me. I'm not recommending it. I'm not recommending you sell your entire XRP portfolio, especially if you're a longer term investor and you see a future or a potential here. But what I am saying is just prepare for a potential touchdown to that $2 range, especially because we're seeing a lot of these risk on indicators really go south. In other words, you don't want to be too risk on in an environment where gold is really climbing up and it's not really correlated to something like XRP or Bitcoin for now. That might change in the future, but that's not the case right now. So just play cautious. And that said, if you enjoyed the video, be sure to subscribe to the channel. I'm not going to give you a long drawn out pitch here, but at the end of the day, this is one of the best tools on the planet to succeed in crypto. If you join Altcoin Pro University, you're going to get everything you need to reach your goals in crypto and change your life. We can't guarantee you're going to change your life, obviously, but if you're looking to be a pro and you want everything possible to win and succeed in the space, head on over to bullrunners.com. You can find the link in the description below. We have a ton of members that are paying to be here. And that's because we offer all sorts of classes and live calls. And I teach a technical analysis call that is private only for our members. I answer questions live. I even go ahead and chat with people in the messages privately. So you get all of this and more. All you have to do is watch this video to check it out. Thanks so much for watching the video. I look forward to seeing you in the next video, my friend. Goodbye.